It's early afternoon here in Cape Town, and I just arrived at an investment property that I quickly want to take a look at. And I'm actually just waiting for the broker to arrive. So as I'm driving to this property and running the numbers through my head and deciding how I want to structure the finance on this deal, it made me think back that first deal 12 years ago and what my perception was as a startup investor around property finance and what is achievable. So like everyone else, I thought that if I wanted to invest in property, I need to get a home loan from the bank and I need to pay that home loan in full. But boy, was I wrong in terms of what is possible. And there's actually 14 ways to get property finance, and access to money should never kill a good deal. So what I want to do this afternoon as I'm waiting for the broker, and hopefully she doesn't catch me off guard, is I want to explain some of those to you, and hopefully that can assist you and open your mind in terms of the possibilities and help you to grow your portfolio fast and efficient as well. So the first one we all know is bank finance or home loan, right? So I don't want to collaborate much on that. Just maybe quickly mention that banks also take into account existing rental income. So if you're buying a tenanted property and you can prove income on the financials for more than 6 months, plus there's a lease agreement, the bank will add the rental income into your affordability. And different percentages, some banks take into account 100%, other banks take into account 70%. And then ABSA also just launched a product called future rental income. So if you want to buy a property for buy-to-let investment purposes and you estimate that the rental income on that property can be 10,000 Rand a month, then ABSA will also add that onto your affordability for a bond. So let's maybe look at some of the more creative ones. As I said, there's 14 in total. We just spoke about one being the banks. The second one is surety, which also brings the banks into play. But in essence, you can stand surety for someone else on finance, or they can stand surety for you. So let's use an example where someone can stand surety for you. Is our youngest client that came to see Empire Wealth the first time 8 months ago is now on her third property, and she's a 19-year-old flight attendant. And what we advised her is, because of her low income levels, is for someone to stand surety for her, which her father then agreed to do. And he did that on the first 2 properties. We helped her and we secured 2 cash flow positive properties. In other words, she didn't need to pay into the bond on a monthly basis. Then the third property, she financed herself through us adding the rental income on the first 2 onto her affordability. So she's now got her third property and she's cash flow positive by 2,000 Rand a month at the age of 19 years. And the future is going to be fantastic for her. Now, another surety is where you can stand surety for someone else. And in this context, I specifically want to give the example of where you use a holding company to invest. Yes, banks do finance companies without a trade record where the director stands surety. And in this case, that would be you. In other words, the company is the principal debtor. You're not the debtor, and you only stand surety. In other words, telling the bank that, look, if the company can't pay the finance, then I will do it. Based on standing surety and the company being the principal debtor, your financial calculation for bank finance doesn't change. In other words, your affordability and your repayment ability, because the company is the principal debtor. Company needs to repay the bond, so your repayment ability doesn't change. And then obviously the concept there is to put in a tenant to pay back the bank, and you share in the upside, both in the appreciation of capital value, but also in the increase of your rental income. So your income position improves every year. Now, on that concept is every bank will give the company finance where you stand surety, because your personal financial position doesn't change with each new bond that the company gets, because you're only standing surety. So in other words, through that model, you can get up to 5 times more finance from the banks. And I'm going to go into this concept in detail in our Empire Wealth free seminar this Wednesday at the SMG BMW in Cape Town, and fully explain how that concept works. And I've been doing that for years, and I have clients now also that's been doing now that for a few years as well, successfully. And you can imagine the compounded growth effect if you can get 5 times more finance today based on your current affordability in your personal name. But just as a footnote, always remember to manage your risks and protect yourself against the loss of income from a tenant, like taking rental insurance products. Another one is institutional finance. So this is in the form of venture capital companies, family offices, or any company like that provides structured finance, where they're looking at the deal and not at the individual behind the deal. So in this case, where you identify an investment opportunity, you put together a proposal for these investors, and they come in as the financiers on the deal. Pretty much like the banks, but they're obviously a bit more expensive than the banks in terms of interest rate, but they provide finance on the deal and not on the individual. Then the third one is private equity, which is pretty much the same concept, but in this case, a private individual that comes in as an equity investor with you on the deal. So you could either stand surety for the finance, he could put in the capital, or he could put in the capital in full, or put in capital and finance, and you put in sweat equity to unlock the value in the deal. So once again, that is through identifying a deal, getting control over the deal, in other words, contractual control over the deal, and then presenting a proposal to an investor to come in on a finance way. Another one is partnerships. So you might have friends or family or colleagues where you can combine forces and buy property together. One could provide the capital, let's say in the instance where they can't get a bond, and the other one can stand surety for a bond. So you can combine forces. Or there's different other ways. Both of you can put in capital, or both of you can finance the deal together, combining your affordability also to be able to get more finance. Then another one is which is fairly known concept in the States, but not so in South Africa, is seller finance, where the seller actually finances the deal, and this can be done fully legally and also structured through an attorney, where the seller can even register a bond over the property and you get the title. Or you could go into an installment sale agreement where the seller keeps the title until you've made the last payment, and title then transfers to you. And I've done quite a few deals on seller finance where the seller is not in need of the full cash on the deal right now, but he's actually more than happy to take passive income or monthly income on that deal as a way of financing it for you, and then obviously getting more from that finance or that deal model through additional interest that he can also charge on the seller finance. Then another one is rent to buy, where you rent a property for, let's say, for 2 years, and then you can refinance it with the bank. During that rental period, you're usually building up a deposit, and you're also proving affordability to the banks. And Empire Wealth actually works with a company that provides rent to buy finance up to 1.8 million rand, both in Cape Town or the Western Cape and in Gauteng. And then another one which one of my friends are using is rent to rent. They're renting a property and then renting it out again on a shared ownership model. In this case, it's a commercial property office space, and he's converted that into mini office units that he's now renting out to business owners. So as you can see, there's many ways of securing property finance. It comes down to having the right plan and having the right strategy. And access to money should never kill the deal. So when I started Empire Wealth 2 years ago, through everything that I've learned in my investment journey, is I've decided to put in place a consultation business to help private individuals. And we're having an event this coming Wednesday, which is a free property investment seminar. And I'm specifically going to look at how to get 5 times more property finance with the right structures, and then also how to blueprint your way to property wealth. And at the event, I'm going to give away my free ebook, which is the 14 ways to secure property finance. And then you'll also see what are some of the others available, and it will explain it in detail as well. So I want to invite you to attend our event. Even though it's a free event, I've set myself a goal to create 100 property millionaires by 2020. So even though it's a free event, it's still by invite only. So you can comment on this post with your name, and then I'll send you the event details. The event's taking place at SMG BMW in Cape Town, which is the one in Century City, and on Wednesday the 14th of November, and it starts at 6 o'clock. So please comment below, and I'll show you the event details. I hope this added some value and provided some insight in what are the possibilities on property finance. One I didn't mention is you don't need to pay for an investment property, you only need to get legal control over it. And that's another topic that I'll share at the event. And I'm also going to share what is happening in the investment in South Africa at the moment, some perspective around land expropriation, where the hotspots are, how you can get into the property market even without any experience. And it's going to be a insightful event, and I hope to see you there. Have a great Saturday, and keep an eye out for my next video, and successful investing. Bye.